The only chart you need to look at today is this one. And I want you to pay special attention to this little uptick right here. And that's because in just one single day, the US government added $275 billion in national debt. And mind you, since the start of October, we've added almost $500 billion in national debt. It's literally socially acceptable not even to have your Halloween decorations up yet in October, and we're already on track to completely demolish records for adding debt to the economy. And normally, I'm like you guys. I think national debt is some amorphous blob of a number that's so big, it's so incomprehensible, it makes no sense to think about. But when you see jumps like this at a time where the entire conversation in Washington is all about controlling debt and the danger of the national debt. Mind you, we have the highest interest rates for debt that we've had in over 2 decades, meaning that every dollar of debt we add is going to cost this country more and more to service that debt with interest payments. You have yourself a toxic combination of circumstances where effectively something absolutely has to break. And we're going to be talking about what that looks like and talking about why Bitcoin in specific is not experiencing this downward pressure that the stock market is experiencing, or at least yet. We're going to walk you through exactly what's happening here because this could be the formula that sends Bitcoin very rapidly to 50,000, 69,000, 100,000. Really, the number becomes very hard to quantify because momentum in these situations can be very abrupt and extreme. But listen to this. Currency devaluations typically occur abruptly, right? This is the keyword, abruptly, during debt crises, okay? And very quickly, what is a debt crisis? A debt crisis is effectively where there's too much debt and people are defaulting on the debt. People, companies, banks, countries, there's like a trickle of debt upwards. And normal people default on their debt all the time, not a big deal. When you have millions of people all at once defaulting on their debt, well, that might be an issue. When you have 1 or 2 companies here and there defaulting on their debt, not a big deal, happens all the time. It's priced into the models. When you have hundreds or thousands of companies across the world, some of the bigger companies in the world defaulting on their debt, now that's an issue. When you have 1 or 2 banks defaulting on their debt, not a big deal. When you have massive amounts of banks defaulting on their debt, or even worse yet, countries, now you get to the issue. This is what a debt crisis is. And what happens is intervention is usually necessary to save the system. Money is printed to pay back the debt that has become bad debt and effectively save the system, to bail out the system. And that is precisely the moment that we're looking at coming up. This is the banking crisis 3.0, and it started with a little preview with Silicon Valley Bank and Signature Bank back earlier in 2023. And this was when you heard about the interest rates rising too fast and all those bonds were falling too fast and all those banks needed a way to pay back their customer bases because they were underwater. Well, that bank term funding program has just been revving up. And with recent movements in the increase in debt and the increase in yields on long-term treasuries, well, we could be setting up for a much bigger banking crisis, a much bigger debt crisis. And of course, the reaction to that would inevitably be a massive money cannon, a printing of money probably on the scale that we have yet to see here in the United States in the history of the country. And that's because the crisis, or the level of crisis that we're at, literally is bigger in value than we've ever seen before. As the economy grows, these potential crises grow in how big they might be. History repeats. We're watching a sovereign debt crisis unfold, sovereign meaning national debt, the debt of the entire country. And there are 2 ways out: massive dollar devaluation or mass defaults. Nobody wants zero yield, hard assets that can't be seized or debased until everyone wants zero yield hard assets that can't be seized or debased, aka Bitcoin. The thing is that safe haven assets like gold or Bitcoin are only really attractive when you need a safe haven. And right now, looking at the absolute mess that is the global, explosive, never-ending, exponentially increasing national debt, the incredibly high interest rate that is being pushed ever higher to control inflation, well, something's got to give here because one is exponentially increasing the other, and it's causing things like this. China is currently dumping their US Treasury bonds. They're dumping their US debt, causing yields to rise even further because the faith in the system is gradually being lowered here. And our trading partners like China are trying to de-risk from the situation of a sovereign debt crisis here in the United States. Think about how crazy that is. It's the doom loop that we've been talking about since early 2022, where effectively yields keep rising because they need to issue so much new debt above plan. And they do this because higher yields have resulted in escalating higher interest payments on debt. So they need more debt to pay for their debt. You see how that becomes quite sticky. So they issue even more debt, which causes yields to rise even higher, which causes even larger interest payments, resulting in even more debt. Eventually something busts here, right? Eventually something busts, or they start to finance and monetize the debt. Meaning you essentially say, okay, well, we're just gonna devalue the dollar by printing a lot more of it. That'll get rid of the old debts, but it'll create widespread inflation, which is something that average Americans or average people just absolutely hate. So you end up between a rock and a hard place. Now remember, as these yields explode higher, that means that all the banks across the United States have net losses on their balance sheet. They're all buyers of US debt, all these banks, right? So if they're losing money on all those bonds that they've bought, then eventually they turn to the Federal Reserve and say, hey, can you bail us out? And that's what the Bank Term Funding Program did earlier this year. Except it's really just the appetizer to a much larger bailout because the problem is far too widespread. And in fact, it's global. And here you can see the Bank Term Funding Program had a massive spike here in about March and then died down a bit and now is creeping back up. And that chart represents how much money banks are borrowing from newly printed, freshly minted, right off the printer greenbacks that the Federal Reserve is creating to bail out the banks. Remember, this is what it looked like as the Fed tried to reduce liquidity in the economy. And then boom, we had this spike back up, and that was the Bank Term Funding Program. And then they've tried to reduce liquidity again. And so my point here is when they do these interventions, things change extremely fast. The amount of liquidity in the economy spikes up. It's not a gradual stair step up. They're not gradually spreading this money out. They're coming locked and loaded with the bazooka, and it's gonna blow some stuff up. And that's how this new money is gonna enter into the economy, with a full-on intervention. Going back to this original tweet here, as Stack Hodler says here, Bitcoin is the ark for the coming fiat flood. I definitely feel that's true. Or the solid shelter for the coming deflationary earthquake. Expect BlackRock and Fidelity to run with this narrative the moment a Bitcoin spot ETF gets approved. Finite supply, zero counterparty risk. Two attributes that will soon be highly valued. Slowly at first, then all at once. Because you don't really care about counterparty risk when everything is working. When everything's fine and dandy, convenience is always the priority. Keeping it simple is always the priority, but uncomfortable truths are only worth confronting in uncomfortable times, in times where you absolutely must. And it certainly seems with the explosive growth of national debt that we're seeing day over day, that might be an uncomfortable truth that we have to face pretty quickly. And we know what the solution will be. They will bust out the money cannons in a way that we have not seen before. They will devalue the dollar, and things like Bitcoin, and really dragging with it the rest of cryptocurrency, will enter into probably one of the most interesting bull markets we've seen. Again, timing this stuff is very difficult. And I would have said, as you guys have heard on my recent episodes, that we should be looking at a dangerous few 6 months here where I'm approaching it with some caution until we get a Bitcoin ETF, until we get closer to the halving, until we get more solidly into 2024. But then again, a money cannon like this could happen at any moment. So let's talk about what that would look like or could look like for Bitcoin price-wise if something like this were to manifest. Okay, so check this out. On the 7th of March here, we had Bitcoin trading for about 9,000, 6th and 7th of March. Then we got a little drop down here to 8,000, a pretty stunning drop, but nothing too crazy. Remember, it was over here at 10,000 just earlier, like a few weeks earlier. Then boom, out of nowhere, we got 5,000. Now, if you were actually watching, it dropped well below this on Wix, not on a closing basis. So you pretty much had more than a 50% drop here in the space of just a few hours. And that is extremely scary. Honestly, one of the scariest moments you'll ever go through is watching these liquidity events play out in crypto. But what happened then is we got the great stimmy of 2020 was announced. We got the recovery measures that not only sent us back into a recovery to the point where by May, we had fully recovered on price. We actually recovered on price here by the end of April here. But what you saw was that this became the beginning of the biggest bull run ever, right? So what you wanted to do was buy this crash. You want to buy that crash because then you get this absolutely monstrous gain here, which, 69,000 from 5,000. call it a 14x. But the real question is now, knowing what we know, knowing that everybody is kind of expecting this isn't like 2020 where you have pandemic and confusion and first of its kind events. We have months and months, years now of people predicting this exact outcome. And not only predicting it, but preparing for it, preparing to buy it. So the question is, will you get this miracle crash? Will you get this complete capitulation down where all of a sudden smart money steps in, knowing that the fix is going to be a money cannon? Maybe. Because obviously when price drops, people's emotions become fearful. Price go down, fear. Price go up, FOMO. It's just science. So if we get a massive collapse on Bitcoin like that, maybe some Binance charges mixed in there, some Tether FUD to make you think this time is truly different. This time it's over. Kids, it's done. Pack it up. Sell them Bitcoins. Well, maybe that'll happen because usually there's got to be some reason to believe it's super duper over. But also there's a potential that we don't get this gift because people are expecting it. And people know that any of these dips are mostly going to be met with money cannons of intervention. Again, the world is in a very weird place, but all roads are definitely leading to intervention because the United States will not willingly let their banking system collapse. They will not willingly let just various banks go under, burying millions of depositors. You see, if they do that, it calls into question the entire system that the global reserve currency of the US dollar is based around. It calls into question the superpower that the United States has been using to reaffirm its dominance globally for upwards of 50 plus years. It calls into question the current world order, which is the US dollar. So ask yourself, will they print money or let the entire system come crumbling down? And obviously, when you phrase it like that, the answer is pretty simple. So the question is, will we get this collapse? Will we get this dip? When will this happen, this credit event? All of these things are tricky to plan around. The main thing that I believe is that there's a possibility that the market is well prepared for what's going to happen already, that the smart money is already positioning around this. I mean, hey, look, it's not a coincidence that BlackRock already has their ETF application in it. It's just a ticking time clock until that thing gets approved. I'm going to close here with two takes here from Chris. Follow Chris Bernitsky. I really like his tweets. Fear is high, but temporarily and price-wise, selling exhaustion is near, in my opinion. For sure, Bitcoin could go to low 20Ks and ETH to low 1Ks. And most everything long tail except Sol can hit new lows. But when we look back on Q4 2023 and Q1 2024, it'll be clear it was a good time to be a buyer. And finally, another take from Chris that I actually really enjoyed, which he tweeted this in February of 2022, very sage, very early in the bear market. It seems too good to be true, but odds are that crypto gets another opportunity similar to 2018-19, where the money-hungry newcomers will lose conviction. Quality will get oversold and the builders will be beasts in the quiet. And he says, I keep pinching myself that it's happening again. Yes, fam, it is happening again. As a builder, it has been amazing to build in the quiet, to prepare for the next phase. I cannot stress enough how much is going on behind the scenes, not just with my own project, but with every project. This is the chance to build while the world is quiet, when you don't have to deal with the incessant noise of the bull market. There is a tidal wave of development coming for crypto. There is a tidal wave of quality that is massively underpriced here in this market, and I cannot wait to explore all that with you. But let's navigate a few twists and turns in the road and make sure to be there with the right mentality if we are to get this massive drop that we know is going to be followed very shortly with a patented money cannon from the Federal Reserve. As always, I'm EllioTrades. If you guys enjoyed this, make sure to click on this video. I talk about my direct investing strategy, my actual breakdowns of how I'm allocating money inside crypto, outside crypto, my overall strategy. It's called the double barbell. You'll absolutely love it. I'm EllioTrades, and I'll see you very soon on the next episode.